What if I told you the market was never meant to make you rich? That every flashing chart, every expert opinion, every promise of quick wealth was just noise, a hypnotic illusion designed to transfer money from the impatient to the patient. Here's the uncomfortable truth. 90% of traders lose money, not because they're stupid, but because they're playing the wrong game entirely. They think trading is about finding the perfect pattern or cracking some hidden code. But the real game, it's about mastering yourself. Every day, millions sit in front of screens hoping to become overnight millionaires. But hope isn't a strategy. It's a donation to those who have one. The market is a mirror that reflects not your knowledge, but your discipline. Not your intelligence, but your impulsiveness. And it punishes you not for being wrong, but for being unprepared. Andrew Aziz learned this the hard way when he lost $6,000 in his first 10 minutes of trading. Not because the market was cruel, but because he approached it like everyone else, with ego, excitement, and zero preparation. But that loss wasn't the end. It was the beginning of discovering that trading isn't gambling. It's a craft. Not adrenaline, but precision. Not chaos, but ritual. In the next few minutes, you'll discover the exact psychological shifts and practical systems that separate the 90% who donate from the 10% who collect, and why success in trading has almost nothing to do with the indicators on your screen and everything to do with the demons in your head. Section 1. The pain of playing without a plan. Picture this. 9:30 a.m. market opens. Alex sees a stock surging 15% with no idea why, no risk calculation, no exit strategy, just pure FOMO, and clicks buy. 2 minutes later, it drops like a stone. Panic sets in. He sells for a $1,000 loss, then watches it recover without him. This isn't trading, it's donation, and he'll repeat this expensive dance until his account hits zero. Because here's what nobody tells you. Every trade without a plan is Russian roulette with your rent money. Andrew Aziz's first trade cost him $6,000 in 10 minutes. $6,000 vanished faster than most people make it. Not because he picked the wrong stock, but because he had no system, no rules, no plan, just confidence without competence. That brutal lesson taught him that the market doesn't care about your feelings, your hunches, or your hopes. It only respects preparation. Think about it. Would you perform surgery after watching Grey's Anatomy? Would you fly a plane after playing Flight Simulator? Yet people throw real money at markets with less preparation than they'd give to parallel parking. The professionals, they know exactly why they're entering, where they'll exit if wrong, where they'll take profits if right, and most importantly, they've accepted the loss before it happens. A trading plan isn't just helpful, it's armor against your own stupidity. Because when that stock starts moving and your heart starts pounding and your palms start sweating, you won't make good decisions. You'll make emotional ones. So before you click another buy button, ask yourself, do I know my exact entry, stop loss, and target? Have I calculated my position size based on risk, not hope? Am I trading my plan or my feelings? Because until you can answer yes to all three, you're not trading. You're gambling with extra steps. Here's the dirty secret. Wall Street doesn't want you to know. The market isn't rigged against you. Your brain is. The moment you risk real money, millions of years of evolution kick in, flooding your system with the same chemicals your ancestors felt when facing a saber-toothed tiger. Except instead of running, you're supposed to sit calmly and follow rules while watching numbers that represent your life savings flash red. Studies show that losing money activates the same brain regions as physical pain. Literally, your brain can't tell the difference between losing $500 and getting punched in the face. No wonder 90% fail. They're trying to make logical decisions while their nervous system is screaming danger. Let me paint you a picture. Trader sees setup forming, not perfect but close enough. Enters position, immediately goes red, brain says cut it, but ego says wait, doubles down to average down, position goes redder, panic sets in, finally exits at max pain, swears to never do it again, repeats identical mistake next day. This isn't a strategy problem, it's a human problem. The market is a massive feedback machine that punishes every psychological weakness. Your need to be right, your fear of missing out, your inability to accept small losses, your addiction to being busy. Professional traders don't have different emotions. They have different responses to those emotions. When Andrew Aziz feels fear, he doesn't suppress it. He acknowledges it and checks his plan. When he feels greed, he doesn't chase. He remembers that pigs get slaughtered. When he feels revenge after a loss, he doesn't double down. He steps away. The transformation from amateur to professional isn't about learning more patterns. It's about creating space between stimulus and response, between feeling and action. Before your next trade, try this. Rate your emotional state from 1 to 10. And if you're above a 7 in any emotion, fear, greed, anger, excitement, don't trade. Because the market will still be there when you calm down. But your capital might not be if you trade on tilt. Most people approach trading like tourists in Vegas, wide-eyed, hopeful, and destined to go home lighter. Professionals approach it like casino owners, calm, statistical, and playing the long game where the math inevitably wins. This shift from gambler to businessman is everything, and it starts with one brutal realization. You're not trying to win every trade, you're trying to execute every trade correctly. And those are completely different games. Andrew Aziz tells a story that changed my perspective forever. One morning, he saw his favorite setup forming. Textbook bull flag, volume increasing, all signals green, but he'd slept 3 hours, felt foggy, knew he wasn't sharp. The old him would have taken it anyway because it's a great setup, but the professional him passed because a great setup with poor execution is still a losing trade. He made $0 that day but saved thousands because professionals don't just know when to trade, they know when not to. Think about a casino. They don't care if someone wins big tonight because they know over 10,000 spins, their 2% edge prints money. Professional traders think the same way. They have a system with an edge. They execute it consistently, and they let probability play out over time. The amateur asks, will this trade win? The professional asks, does this trade fit my system? The amateur celebrates every win and mourns every loss. The professional treats both as data points in a larger sample size. This isn't about removing emotion. It's about removing emotion from decisions. You can feel excited about a win, disappointed about a loss, but those feelings don't change your next trade. A surgeon doesn't operate differently because the last patient died. A pilot doesn't fly differently because the last flight was turbulent. A professional trader doesn't trade differently because the last trade lost. Your job isn't to predict the market. It's to execute your edge with robot-like consistency and let the math work over time. While amateur traders roll out of bed at 9:25 and start clicking buttons by 9:31, professionals have been preparing for hours because here's what separates donation from domination. The battle is won before the bell rings. Andrew Aziz wakes at 5:30 a.m., not to trade, but to prepare his mind. And his routine is so specific it borders on religious. Review overall market conditions, scan for stocks in play, volume plus news, mark key levels on top 3 candidates, visualize both winning and losing scenarios. Write his plan in detail, then, and this is crucial, step away from screens for 10 minutes to breathe. This isn't motivation, it's activation of a professional state of mind. Think about it. A sniper doesn't show up and start shooting. They study wind patterns, calculate distance, control breathing, visualize the shot. Trading is the same, preparation isn't optional, it's the difference between precision and panic. Here's exactly what pros scan for. Stocks gapping up or down, over 2% on volume 3x average, clear support, jaw resistance levels from previous days, catalyst quality, earnings, good, vague, PR, sexar, bad, and most importantly, they pick maximum 3 stocks to watch because focus beats FOMO every time. But the real edge isn't in the scanning, it's in the mental preparation. Before markets open, Aziz asks himself 3 questions. Am I physically and mentally ready to trade? Do I have clear plans for my selected stocks? Am I prepared to walk away if nothing sets up? If any answer is no, he doesn't trade. Period. The market offers opportunities every single day. You don't need to catch them all, just the ones you're prepared for. Amateur traders start their day chasing whatever's moving. Professionals start their day knowing exactly what they're hunting and why. That 90 minutes of morning preparation saves hours of afternoon regret, because clarity in the morning prevents chaos at the open. Section 5, 1 strategy. Mastery the sniper approach. Here's what nobody on YouTube will tell you, because it doesn't sell courses. You need exactly 1 strategy to make money trading, but you need to execute it 1,000 times to make it profitable. Amateur traders collect strategies like Pokemon cards, head and shoulders, cup and handle, MACD crossover, RSI divergence, thinking more tools equal more money. but that's like thinking more keys make you a better pianist. Andrew Aziz traded profitably for years using primarily one setup, the opening range breakout, ORB, and here's exactly how it works. First, 5 minutes after open creates a range, wait for price to break above range with volume, enter on pullback to breakout level, stop loss below range low, target 2.1 minimum. That's it. No magic, no secrets, just the same setup executed with boring consistency. The power isn't in the pattern, it's in the repetition. After 100 ORB trades, you start seeing nuances, which breaks fail fast, which hold strong, when volume lies, when to size up, when to pass. After 500 trades, you're not thinking anymore. Your hands execute while your mind observes. After 1,000 trades, you've seen every variation, every fake out, every perfect setup, and your execution becomes unconscious competence. But here's what most traders do. Try ORB 10 times, lose money because they're still learning, abandon it for the next shiny strategy, repeat until broke. They're not failing because the strategy doesn't work. They're failing because they won't commit long enough to make it work. One strategy mastered beats 10 strategies memorized, because in the heat of the moment when prices are flying and emotions are high, you need muscle memory, not mental gymnastics. Pick one setup that makes sense to you, back-test it on 100 charts, forward test it on simulator for a month, then trade it with small size until it's automatic. The edge isn't in the strategy, it's in the mastery. Section 6, the art of losing, your most profitable skill. Want to know the difference between traders who last and traders who blow up? It's not how much they make when they're right, it's how little they lose when they're wrong. Here's a stat that will change how you trade forever. Professional traders are wrong 40–60% of the time, but still print money consistently. How? Because they've mastered the most important skill in trading, losing correctly. When Andrew Aziz takes a loss, it's not an accident or a surprise. It's a predetermined business expense, like rent for an office or fuel for a taxi. Before he enters any trade, he knows exactly where he's wrong, stop loss, exactly how much he'll lose, position size, and he's already accepted that loss mentally. Compare that to amateur Alex who enters with feel, no stop loss, then watches a small loss become a big loss while praying for a reversal that never comes. Here's the math that matters. Lose 1% 5 times, down 5%, but won 10% winner, up 5% net. Lose 10% once trying to avoid a 1% loss. Need 11% just to break even. The math of recovery is brutal and asymmetric, which is why protecting capital isn't defensive, it's offensive. Professional traders have a maximum loss per trade, usually 0.51% of account. A maximum loss per day, usually 2–3%. And when hit, they stop. No revenge trading, no one more try, no emotional decisions, just disciplined capital preservation. Think of it like a safety valve. When pressure builds, it releases before explosion. But here's the psychological trick. When you predefine your risk, losses don't hurt the same way. It's not failure, it's feedback. It's not personal, it's probability. A good trade that loses money is still a good trade if you followed your plan. A bad trade that makes money is still a bad trade that will eventually kill you. The market will test your stop loss like a bouncer checking ID. Sometimes you'll get stopped out right before the move you predicted, and that's okay. The stop loss isn't there to be perfect. It's there to keep you alive for the next 1,000 trades. Section 7, Risk Management, the Invisible Profit Engine. Let me hit you with truth that will save your account. Risk management isn't the boring part of trading. It's the only part that actually makes money. You can have the world's best strategy, perfect entries, flawless technical analysis, but without position sizing based on risk, you're just gambling with extra steps. Here's Andrew Aziz's formula that turned him from loser to consistent winner. Risk per trade, miles 1% of account, stop distance, entry to stop loss price, position size, risk, stop distance. Example with real numbers, $10,000 account, Gershborn 100 risk per trade, buy at $50 with stop at $49, $1 stop distance, position size, 100, $1, 100 shares. That's it. No emotion, no guessing, just math that keeps you alive. But here's where amateurs mess up. They pick position size first, I'll buy 1,000 shares, then hope the loss won't hurt too much. That's like choosing your speed before checking the road conditions. Eventually, you crash. Professionals do the opposite. Define acceptable loss first, then work backwards to position size. This creates psychological freedom because every trade risks the same amount, removing the temptation to go big on trades that feel good. The magic happens over time. When every loss is contained to 1%, you can be wrong 10 times straight and only be down 10%, but one good 5% winner cuts that drawdown in half. Compare that to the amateur who loses 20% on one sure thing and needs 25% just to break even. Here's what really separates pros from rookies. Pros increase position size only when stop distance decreases, meaning they buy more shares when risk is lower, fewer when risk is higher. It's counterintuitive but mathematically beautiful. Risk management isn't about avoiding losses. It's about surviving long enough for your edge to play out over hundreds of trades. Every trader who's still profitable after 5 years will tell you the same thing. They got serious about position sizing, or they got taken out. Section 8. Platform and Tools, the Professional Setup. Here's a $10,000 lesson I learned the hard way. Using the wrong trading platform is like performing surgery with a butter knife. You might eventually succeed, but you're making everything unnecessarily difficult and dangerous. When Andrew Aziz started, he used his bank's trading app. 5-second delays, market orders only, $9. 99 commissions, and wondered why he kept losing. Then he switched to a direct access broker with hot keys, level 2 data, and millisecond execution, and suddenly the same setup started working. The tool didn't make him profitable, but the wrong tool was definitely making him unprofitable. Here's what actually matters in a platform. Order execution speed, milliseconds count when momentum trading, hot keys for instant entry, just exit, mouse clicking is too slow, level 2 and time in sales for reading order flow, direct routing to avoid payment for order flow delays, and reliable technology that doesn't crash during volatility. But here's the trap. More tools don't equal more profits. Aziz's screen has exactly 3 things: price chart with volume, level 2 order book, and time in sales. No RSI, MACD, Bollinger Bands, or rainbow indicators. Just price, volume, and order flow. Why? Because in the moment of decision, simplicity beats complexity every time. Professional traders pay $100, $200 a month for professional platforms, and amateurs think that's expensive while losing thousands to bad fills and missed exits. Think about it. If proper tools improve your execution by just 0.1% per trade, they pay for themselves in a week. The platform isn't sexy, but neither is a scalpel. Both are precision instruments that do exactly what's needed, nothing more. Set up your platform once correctly, then forget about it. Hotkey your order types, customize your layout for speed not beauty, and practice until execution is unconscious. The best platform is the one you don't think about, because it just works. Stop platform hopping, pick professional grade tools, learn them deeply, then focus on what actually matters, executing your edge with discipline. Section 9, the feedback loop, journaling your way to profits. If you're not journaling your trades, you're not trading. You're gambling with amnesia. Here's why Andrew Aziz credits his journal as the single most important tool for profitability. The market gives you feedback through profit and loss, but without recording the context, you're throwing away million-dollar lessons. Every professional trader has horror stories of repeating the same mistake 50 times before finally journaling and seeing the pattern. Here's exactly what separates amateur scribbles from professional tracking. Screenshot of entry-exit on chart. Emotional state before, during, after. Rated 1 to 10. What went right, even in losses. What could improve, even in wins. Pattern recognition over time. The magic isn't in any single entry. It's in the patterns that emerge over dozens of trades. Aziz discovered he lost money every Friday afternoon, weekend anxiety, won most on Tuesday mornings, peak focus, and consistently stopped out on trades taken after 11 a.m., fatigue. Without a journal, those patterns stay invisible while quietly draining your account. But here's the advanced move. Review your journal weekly, not daily. Daily review is too emotional, too close to the pain or pleasure. Weekly review shows patterns, monthly review shows progress, quarterly review shows transformation. The journal becomes a mirror that reflects not just your trades, but your evolution as a trader. One trader shared this. After 6 months of journaling, he realized 80% of his losses came from revenge trading after a red morning. Solution? Hard rule. After 2 losses, laptop closed, gym time. His profitability doubled, not from better setups, but from eliminating self-destructive patterns. The journal isn't homework. It's intelligence gathering on your most dangerous enemy, yourself. Every trade without documentation is a lesson wasted, a pattern missed, a mistake waiting to repeat. Start simple. Screenshot. Emotion rating. 1 improvement. Build the habit before perfecting the system. Your future profitable self will thank your current disciplined self for having the wisdom to document the journey from amateur to professional. Here's what every guru selling courses won't tell you. Before risking real money, Andrew Aziz simulated 500+ trades, and that's not weakness, that's intelligence. Trading without simulation is like joining UFC after watching YouTube. Technically possible, catastrophically stupid. The market doesn't care about your confidence. It cares about your competence, and competence is built through repetition without consequence. Professional traders treat simulation like professional athletes treat practice. Full intensity, real rules, serious review. Here's the framework that works. Same platform as live trading, build muscle memory correctly. Same position sizing calculations, practice the math. Same emotional engagement, your brain doesn't know it's fake. Same journaling and review. Lessons are real, even if money isn't. Minimum 100 trades before going live, statistical significance. But here's where most fail. They treat sim like a video game. Massive position sizes, no stop losses, random entries. Then wonder why live trading feels different. You must simulate exactly how you'll trade real money, or you're building the wrong habits. Aziz shares this story. One student simulated perfectly for 3 months, went live with small size, and was profitable from week 1. Not because she was special, but because she'd already made every mistake safely. She'd felt the frustration of stopped hunts, the pain of missing entries, the regret of early exits, all without losing real money. The psychological benefit is huge. When you've executed your setup 100 times in simulation, the 101st time with real money feels familiar, not terrifying. The mechanics are automatic, leaving mental space for managing emotions. Think of simulation as paying tuition to the market university with time instead of money. Every simulated loss is a real lesson without real pain. Every simulated win builds real confidence without real risk. The market will still be there after you've properly prepared, but your capital might not be if you rush in unprepared. Minimum 3-month simulation for new traders, 1 month for new strategies, no exceptions. Pride costs more than patience saves. Success in trading looks nothing like Instagram suggests. It's not Lamborghinis and beach laptops. It's spreadsheets and morning routines repeated until they become meditation. Andrew Aziz made his fortune not through excitement, but through engineered boredom, doing the same pre-market routine, trading the same setups, managing the same risks day after day until profits became as predictable as sunrise. The psychological shift is profound. Amateurs seek excitement. Professionals seek consistency. Every day Aziz opens the same scanners, marks the same levels, trades the same patterns because variability is the enemy of profitability. His trading day is so routine, he could do it sleepwalking. 5:30 a.m. wake, 6 a.m. scan, 7 a.m. plan, 9:30 a.m. execute, 11 a.m. done. No drama, no heroics. Just systematic execution of an edge proven over thousands of iterations. Here's what this really means. Your best trading days will feel boring because everything goes according to plan. No surprises, no adrenaline, no stories to tell, just clean execution and steady account growth. The excitement seekers wash out because they can't handle the monotony of winning. They'd rather lose dramatically than win quietly. But compound this quiet winning. 0. 5% per day is 10% per month, 120% per year, life-changing in 5 years. Not through home runs, but through singles, hit with boring consistency. The market rewards discipline, not drama. It pays patience, not passion. Professional trading is about becoming a profitable robot, not a financial cowboy. One trader put it perfectly. I used to trade for excitement. Now I trade for freedom. And freedom looks like doing the same thing every day until my account says I don't have to. The paradox is beautiful. The more boring your trading becomes, the more exciting your life can be. Because consistent profits buy choices, not thrills. Are you willing to be bored into wealth, or will you insist on being entertained into poverty? The market doesn't care about your entertainment. It only respects your discipline. Every trader has war stories about the losses, but professionals have something amateurs don't: a recovery protocol that turns setbacks into setups for success. When Andrew Aziz takes a max loss day, down 3%, he doesn't revenge trade, sulk, or pretend it didn't happen. He executes a recovery ritual as precise as his trading plan. First, immediate stop. Screens off, no exceptions. Second, physical reset. Gym, walk, or swim to discharge stress hormones. Third, written review. What went wrong objectively, no self-judgment. Fourth, next day plan. Often reduced size or no trading to rebuild confidence. This isn't weakness, it's strategic recovery that preserves both capital and sanity. The psychology here is crucial. Losses create emotional scar tissue that affects future decisions unless properly processed. One bad day followed by desperate attempts to make it back is how accounts die, not from the initial loss, but from the emotional spiral after. Professionals know that trading capital is renewable, but emotional capital is finite. Once depleted, even perfect setups look terrifying and clear thinking becomes impossible. Here's a protocol that saves accounts. After any 2% daily loss, stop trading immediately. Write 3 things: what went wrong, what went right, what to do differently. Do something physical for minimum 30 minutes. Review your best trades journal to rebuild confidence. Next day, trade 50% size until you have 2 green days. This isn't about the money. It's about rebuilding the psychology required to execute properly. Think of it like sports injury. You don't play through a torn muscle. You rehab properly to prevent permanent damage. Aziz learned this expensively. Early in his career, a $2,000 loss turned into $10,000 because he couldn't accept the initial pain. Now, his recovery protocol has saved him hundreds of thousands by preventing emotional trading. The market will always be there tomorrow, but your judgment might not be if you trade through tilt today. Professional trading isn't about avoiding all losses. It's about ensuring no single loss becomes terminal. Red days are tuition. Revenge trading is dropping out of school. Here's the deepest truth about trading success. You don't get the results of a professional trader until you become a professional trader. And that transformation happens in your identity before it shows in your account. Andrew Aziz didn't just learn to trade. He became a trader, and that shift from doing to being changes everything. Your subconscious runs the show, and if deep down you see yourself as someone trying to trade rather than a trader, you'll sabotage every strategy with amateur behavior. The identity shift happens through consistent actions aligned with who you want to become. A trader wakes up early, action, because traders are disciplined, identity. A trader follows stop losses, action, because traders manage risk, identity. A trader journals every trade, action, because traders learn from data, identity. Each action is a vote for your new identity, and after enough votes, the identity solidifies. But here's the acceleration hack. Speak your identity before you fully feel it. I am a disciplined trader, said every morning rewires neural pathways. I follow my rules becomes self-fulfilling prophecy. I respect risk above all programs' behavior. This isn't woo-woo, it's neuroscience. Your brain adapts to the story you tell most frequently. Watch the language shift. Amateurs say I'm trying to learn trading. Professionals say I trade. Amateurs say I hope this works. Professionals say I execute my edge. Amateurs say the market screwed me. Professionals say I manage that poorly. The language reflects the identity, and the identity drives the behavior. One trader shared this transformation. I stopped saying I want to be a trader and started saying I am a trader who's improving. That subtle shift changed everything. I stopped hoping and started executing. I stopped gambling and started working. My results followed my identity. You must decide. Are you a gambler playing with trading or a trader building a business? Because your account balance will eventually match your identity. The market is undefeated at revealing who you really are versus who you pretend to be. Step into the identity now and let your results catch up to your decision. Trading is the loneliest profession on earth until you realize it doesn't have to be. Andrew Aziz spent his first year in complete isolation. No feedback, no community, no reality check. Just him and his mistakes echoing in an empty room. Everything changed when he found a community of serious traders. Suddenly, his learning curve went vertical, his mistakes decreased, and his psychology stabilized. Not because they gave him tips, but because they gave him mirrors, reflections of what discipline looks like, sounds like, acts like daily. Professional trading communities aren't Discord, pump and dump schemes, or Reddit YOLO forums. They're more like athletic training centers where everyone's working on their own game, but raising the collective standard. In Bear Bull Traders, Aziz's community, members post pre-market plans publicly, accountability, share trade reviews with screenshots, transparency, discuss psychology openly, vulnerability, and celebrate discipline over profits, values. The transformation is remarkable. Traders who join serious communities improve 3x faster than solo traders, not from copying trades, but from absorbing standards. When you see someone post, "followed my stop," "small loss," "good trade," and get more respect than someone posting random profits, your brain rewires. When everyone around you journals, you journal. When everyone respects risk, you respect risk. It's behavioral economics at work. We become our environment. But here's the key. Choose your community like your life depends on it, because your trading life does. One toxic group pushing FOMO trades can destroy years of discipline. Look for communities that celebrate process over profits, share losses openly for learning, have members with verified track records, focus on education, not signals, and charge enough to keep out the uncommitted. The paradox of trading is you must make decisions alone, but you grow fastest together. Even Aziz, after years of profitability, still attends his own community's pre-market meeting every day. Not because he needs trade ideas, but because he needs the reminder of who he is, a professional among professionals. You're not weak for wanting community. You're smart for accelerating your evolution through proximity to excellence. The lone wolf trader is a myth. The pack hunter survives and thrives. Section 15. Your next trade. The decision that changes everything. You've just downloaded years of hard-won wisdom in minutes, but here's the truth. Information without implementation is worthless. Right now, you stand at the same crossroads Andrew Aziz faced after losing $6,000. You can dismiss this as interesting content and keep donating to the market, or you can decide this moment marks the beginning of your transformation from gambler to trader. The decision isn't about money, it's about who you're willing to become. Starting tomorrow morning, wake up 90 minutes before market open, not to trade, but to prepare like a professional. Pick one setup, just one, and commit to mastering it through 100 simulated trades before risking real capital. Create a position sizing rule based on 1% risk and tattoo it to your soul. Journal every trade with screenshots and emotions, especially the losses. When you lose, execute your recovery protocol. When you win, stay humble and stick to process. Find a community of serious traders, not gamblers seeking thrills. Most importantly, decide right now. I am a trader, not I want to be a trader. This identity shift is non-negotiable. The market has been waiting for the real you, the disciplined you, the patient you, the process-focused you to show up. Every amateur with a phone can click buy. Only professionals can execute a system with boring consistency through winning and losing until compound math creates freedom. Your edge isn't in finding better setups. It's in becoming a better trader. The strategies work. The question is whether you'll work the strategies long enough to let them work. The market doesn't care about your excuses, your feelings, or your dreams. It only respects your discipline. And discipline starts with the next decision. Will you close this video and forget? Or will you open a journal and begin? The path from donation to domination starts with a single trade executed correctly, followed by another, then another, until excellence becomes habit and profit becomes predictable. The bell rings in the morning. The question is, who will show up, the old you or the trader you're becoming? Choose wisely. Your future self is watching.